Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod, succeeding the great Warren Buffett.
The shoes to fill are tough on all fronts.
Greg Abel, the new CEO of Berkshire Hathaway, joins us for his first major interview since taking over from the Oracle of Omaha on January 1st. Abel on the Berkshire Company's investment portfolio and the $370 billion plus cash pile.
We really view that as an opportunity.
Plus, in a move befitting Buffett himself, this new CEO isn't too concerned about his paycheck.
So you're basically taking all of your take-home pay and putting it into shares of Berkshire.
Yes, and the why is really important.
Big shoes to fill and a big promise.
I'm committed to doing this every year.
Your entire salary?
My entire salary, as long as I'm the CEO.
All that and more coming up today. It is Thursday, March 5th, 2026. Squawk Pod begins right now.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernen and Andrew Ross Sorkin. Andrew, good morning. It's good to see you.
Morning from Washington, D.C., but you can't tell right now because it's
a little dark
foggy bottom behind you. This is typically where you see the Capitol right behind us. You know this shot.
Wow.
Joe was just sitting in this chair before, I think, about a week and a half ago. And here we are in... Well, anyway, maybe the fog will go away.
We'll take your word for it. Yeah. Hopefully it's there. we didn't miss anything, did we?
Yeah.
The clerk will report.
Senator from Virginia, Mr. Kane, moves to discharge SJ Res 104 to direct the removal of United States Armed Forces from hostilities within or against the Islamic Republic of Iran that have not been authorized by Congress from the Committee on Foreign Relations.
Mr. President.
Senator from Virginia.
I ask for the yeas and nays.
Mr. Johnson. No. Mrs. Capito, no.
On this, the yeas are 47, the nays are 53. The motion to discharge is not approved.
The Senate voting down an effort to stop America's involvement in the Iran war. The vote on the so-called War Powers resolution was 47 in favor to 53 opposed. It was largely along party lines. Passage would have meant senators would have a say before future U.S. attacks. The House is set to vote on a resolution today. Even Senator Fetterman, who voted no on it. Rand Paul went the other way and voted yes on it. But the Fetterman was pointing out this is all for show because he has 60 days from the beginning of before anything. So it was just done to register disapproval at this point, and nothing was going to happen, and it wouldn't happen anyway, and it wasn't going to pass. But certainly we think Congress is right to do this, and they've done it in the past for different operations. It goes back, the only time we've declared war in the last 100, I guess World War II was the last time there was actually a declaration of war. And there were a couple of incidents with Obama guys where you still had something that was passed after 9/11 that allowed for anyone even remotely concerned with that, you could make the case that I still have the authority to do something like that. Libya, less so, and then some previous. I mean, think about it. Korean War never declared. The Vietnam War never declared. It is, and as it's. Remember when we talked about strategic ambiguity for Taiwan? The writers of the Constitution, they said one thing in Article 1 and another thing in Article 2, and there is some ambiguity. The commander-in-chief has the right to command the military as he sees fit, yet Congress has to weigh in on actually declaring war. So both sides have always been able to find enough wiggle room to do exactly what's happening right now.
The document has stood the test of time.
Yeah, they were pretty savvy, or they didn't know exactly how to.
Well, how can you anticipate what's going to be happening 250 years in the future?
Right, exactly 250.
Exactly, right. All right, in the meantime, the CEO of Anthropic still trying to reach a deal with the Pentagon on use of his company's AI. The Financial Times says that Anthropic chief Dario Amodei has been speaking with an undersecretary of defense in an effort to define how the Pentagon could use the company's technology. An agreement could mean that Anthropic avoids the designation of supply chain risk. Reuters is reporting that Amodei has spoken about this situation in recent days with Amazon CEO Andy Jassy and others. Separately, in a letter that was shared with CNBC, a group of former defense and intelligence officials and policy experts called for Congress to investigate the Pentagon's decision to designate Anthropic as that supply chain risk. And without naming Anthropic, a tech industry group whose members include NVIDIA, Google, and Anthropic voiced concern to the Defense Department over that supply chain risk designation. In the meantime, the FT reports that OpenAI is looking to add to protections to its own agreement that was reached recently with the Pentagon. That deal has faced criticism from OpenAI employees, and CEO Sam Altman admitted that, in his words, the timing of that deal looked both opportunistic and sloppy, and there is fallout kind of on all sides of this. It's a continuing conversation. We've been having the discussion here all week on set, going back and forth about what should happen. We brought it up yesterday with Treasury Secretary Bessent. Just this idea, it's one step to say you're not going to use the technology. It's quite another thing to say that this is a supply chain risk, which means that that anybody who's a contractor to the government can no longer use that technology as well.
And there's nothing close, Sorkin? I mean, for what it's used for in this context, there's nothing. And we're still using it, right? Even though we say we're not, we still are, right?
No, look, we're going to be using, the Defense Department is going to be using Anthropic, I imagine, at least for the next 6 months as they get off-boarded and maybe onboard other models. In this particular moment, yes, Claude and the product that Anthropic provides is probably the quote-unquote best product. Having said that, it's possible in 2 months from now that the next version of what OpenAI is doing will be the best version of it. It may be that Google is the best version of it. But interestingly, to me, the backlash that's happening inside OpenAI and the fact that OpenAI plans to, and if already hasn't, effectively requested basically the same protections that Dario at Anthropic was requesting, I think throws this whole thing up into a question. So when you hear Treasury Secretary Bessent say we can't have companies telling us what to do, well, if that's true, well, then why are we signing up deals with OpenAI? I think ultimately, and this is where I think Sam Altman is right, you don't want effectively CEOs to be making the decisions necessarily about how and what these products can or cannot do. Having said that, and you've probably heard the analogy many times, if you're going to manufacture a vehicle and it happens to have a button inside the vehicle that's under development, and you know that if you hit the button, it does terrible things. You're a healthcare company, you create a drug that mostly does good things, but maybe does some terrible things. The question is whether you should be either selling that product at all, or if you're going to, it should probably come with restrictions.
Yeah. We were talking yesterday. I understand you don't want perhaps the security of all Americans being, looked at, but don't we already have autonomous weapons that we're using? Isn't that sort of what, not necessarily just drones, but okay, so we want them and we're okay with it, but we don't want them being too good. I don't understand. Don't we want the best autonomous weapon? We just got to admit it. We want killing machines that work for war. And we want to give our soldiers the best things we have, right?
Sure, but the product, if the founder of the company is telling you that the product doesn't work,
well, that's a different story.
That is the story. That is the story. If you talk to Dario, he will tell you that they are trying to make the product work. They want the product to work, but there are still, you talk about hallucinations. We have these conversations about how good or bad AI is. In this particular moment, it is unclear whether the product will work the way it's supposed to work all of the time. And if you're in the business of killing other people, I would hope that you would only want to use a product in which the company could stand behind the actual product of that component part.
If you believe that that's it. There may be other reasons. You remember how many times in the past defense contractors just had this, there was a backlash culturally against ever supporting them, or even.
But I don't think that's what's really the issue here. And first of all, I don't think that's the issue here. And I think I know that, but I think the secondary issue, and maybe it's really the first issue here, is one of personalities and of politics. Unfortunately, That's, to me, where this has gotten really all bollocksed up. We're talking about supply chain risk and this and that. But ultimately, if you understand Emil Michael at the Department of War, and you understand where Dario is, and you look at the politics of both of those folks, you look at the politics of the Secretary of the Treasury yesterday, and some of the things that have been said over the years, and even where OpenAI is, it all makes a lot more sense than the underlying argument about what's allowed and what's not allowed, because effectively OpenAI is trying to do exactly what Anthropic's doing anyway.
Right, and Andrew, I will also say, earlier this week we had Alex Harstrick on with us. He is a veteran. He's now involved in investing in all sorts of defense companies and beyond. His point was that the language of Silicon Valley is so different than the language of the Defense Department, and that they end up talking over each other in some ways, too.
It is easy to comment on the nomenclature difference between Silicon Valley and the military-industrial complex. So when the Pentagon talks, the Pentagon is a command and control culture.
He thinks if you can boil this down and maybe get to the point where you have other intermediaries who are kind of helping you talk this through, you might be able to reach some sort of agreement. And I wonder if that's why, as the FT is reporting, Dario Modi is talking to Andy Jassy and others about exactly what this is.
Well, look, the reason he's talking to Andy Jassy is Andy Jassy is one of their largest investors. That's why he's talking to Andy Jassy.
But he also has a better idea, I think, Andy Jassy, of how to talk to the government in some of these ways, too.
To some degree, but I would argue, by the way, Emil grew up in Silicon Valley. I mean, the guy who is negotiating this deal, the one who has been on Twitter saying what he's been saying about Anthropic and the like, worked at Uber. To me, this is not a conversation about people talking past each other or something else. These people know each other. They know each other and don't like each other. That's what's happening here.
Well, that happens too. So we all can agree that we want the best AI-operated autonomous weapons that we can possibly get. But we definitely don't want them like
mass
we don't. No, we don't. Right, but we don't want the weapons to be launched and then come back and hit the place they were launched.
Correct.
That would be bad.
That would be bad.
Okay.
You want war games.
We want them to work.
War games. I don't know if you remember the Matthew Broderick.
But it's a moral question. Do you want think about the nuclear arsenal. Do you really want to make things like that can never be used? So,
or that can be used without a human.
Well, that was think of the neutron bomb. Leaves all the buildings.
Yeah.
Just kills people. Well, we're a business show, but these things matter.
Cheese will be next.
Coming up, for the first time in some 60 years, Berkshire Hathaway has a new leader. CEO Greg Abel joins us for his first sit-down interview since succeeding famed investor Warren Buffett earlier this year. And he came out of the gate with an 18-page shareholder letter. No pressure.
President Lincoln said, yes, this letter is very long, but I didn't have time to make it shorter.
Was that hard?
And I use that to everyone because everybody would be texting me while I'm halfway through. But so far, it's going well.
Squawk Pod will be right back. This is Squawk Pod from CNBC.
Stand Becky by in 3, 2, 1. Cue her, please.
Good morning, everybody, and welcome back. We have some breaking news right now coming from Berkshire Hathaway. The company has just filed a Form 4 and an 8K. And joining us to talk about those topics and his first letter to shareholders after taking the reins from Warren Buffett is Berkshire Hathaway's CEO, Greg Abel. Greg, welcome. It is great to see you this morning.
It's great to be here. Good morning, Becky. Morning, Joe.
Yeah, we really appreciate your coming on set. We have so much to talk about. But let's jump in with the news that is just crossing the wires, and that's what's coming from the 8K. That's the big headline here, that Berkshire Hathaway has begun repurchasing shares of the common stock under the previous policy that had been out there before. How many shares are you buying back? Why are we hearing about this?
Yes, so we've had a long-standing policy that when the intrinsic value, as we see it, and computed on a conservative basis, when it exceeds our market price, Berkshire has always acquired shares. That's been our long-standing policy. We highlighted that in the 10K and in my letter that remained in place, and we've just recommenced yesterday. So The point being, we see value, the intrinsic value exceeds the current market value, and we started recommence purchasing. And we felt it was important to communicate to our shareholders, our partners, our owners, that with the transition of leadership, and that this is the first time we're purchasing shares, it was important to let them know we've recommenced.
Yeah, the last time that you had bought back shares was May of 2024. Berkshire shareholders have long realized that it might be Charlie, maybe, or Warren talking to each other, kind of figuring what they thought was a fair value for the price of things. Did you talk to anybody about it, or you looked at it and you thought this is a good time to be buying back?
No, absolutely talked to Warren. So how I approached it was obviously looking at the value, having a view of intrinsic value, consulted with Warren relative to the value and the timing of, are we ready to recommence? And the thought there was, after the consultation, we filed our 10K. There's a 48-hour cooling off period, Monday and Tuesday, and we commenced purchasing on Wednesday morning.
Have you been looking at this for a long time?
We look at it continuously.
What are the 3 top things that would make you think that is something to the price of sales? Is it what jumps out as a signal that the intrinsic value is not recognized by the share price? Which thing?
What we always look at is what are the economic prospects of each of our companies in Berkshire. And we look at that over the long term.
Is it a gut feeling more than, are there numbers where you'd say, okay, this hit 80% of book, this part of Berkshire, or something like that? Nothing that specific.
It's really just looking at the economic opportunities that exist within Berkshire, and are we comfortable that the value proposition is very strong, and we're doing it on behalf of obviously our shareholders and owners. We have to view this as value, that we're creating value for our shareholders long term.
So if the stock goes up from the announcement or from the buybacks, how long would you do this? How much will you keep doing it until it remains the case that you feel it's undervalued? You can do as much as you want?
Correct. As long as our intrinsic value exceeds the market value, again, conservatively determined, we'll continue to repurchase. But the one thing we have never done is we don't disclose the amount, the timing, or the computation. But we did feel this time it was important because of the change in leadership that we should
not even
highlight.
A ballpark.
So we're not going to hear something like this from you again. We won't know when you're in the market buying back.
This is a one-time event to let our shareholders know.
And you won't say it's a $20 billion buyback and we're halfway through. We won't know anything.
Correct.
Is that a reasonable number? Could it be? It could be a lot more at Berkshire.
It's completely dependent upon the intrinsic value.
Okay.
And how that equation remains in place.
So Berkshire shares up until a minute ago were down maybe 1% over the last year. Market's been up. You guys have $373 billion in cash as of the last filing.
Correct.
I guess you're looking around and it tells you that this is something that makes way more sense to you than buying other things, other stocks, but making other purchases.
Exactly. We always look at effectively 3 buckets when we're allocating our capital. We have our existing businesses. Deploying capital back into those, both for their current operations and incremental opportunities. That really exists every day, and we're constantly challenging ourselves. Are we thinking about that properly? As you highlighted, Becky, there's also, do we acquire stock? And when we're looking at companies, do we acquire whole companies also? And then there's do we acquire equities, other equities? And as we've highlighted, we always look at that as very similarly to buying 100% or 2%. And then the third bucket where we deploy our capital is share repurchases. Each of those, with the amount of capital they have, can be done independently. So when we're purchasing our shares, it's not taking away from any of the other decisions.
Okay, we're going to come back to this line of questioning and some of these issues here. But before we do, I want to talk about another form that you put out today, too. That's a Form 4. It may not jump out as people as being as significant as I think it is. But in it, you say that you are buying 21 Class A shares. This is the disclosure of that, $15.3 million. What's the significance behind that purchase?
Yes. And the significance is, if you look at my 2026 compensation that I'll receive this year, what we've done is, and what I've done, is taken the after-tax dollars of approximately $15.3 million and reinvested it or purchased Berkshire shares with the after-tax dollars.
All of the after-tax.
All the after-tax
So you're
dollars.
basically taking all of your take-home pay and putting it into shares of Berkshire.
Yes, and the why is really important. One, as we've always highlighted, absolute alignment with our shareholders, our partners, our owners is critical. I already have some shares, but the goal was to continue to demonstrate alignment with them. Two, as the CEO, I absolutely, obviously believe in Berkshire. With the transition from Warren, and I inherited a company that has an incredible foundation. I believe in its future, the opportunities that exist there. So I was very excited to use my after-tax proceeds and my compensation, as you highlighted, all of it, and effectively do it as we came out of the blackout period. Now, there is another part to this that's really important, because I really view this more as a plan or an approach. I'm committed to doing this every year going forward.
Your entire salary?
My entire salary, as long as I'm the CEO, and I touched on it in the letter. I hope it's 20 years, but I will do that. So we'll file our 10K. I'll write the letter, and after the 48-hour cooling off period, I'll purchase 15.3 million next year, or whatever it is, the after-tax dollars.
Yep. I love the Midwest, but I was kidding you when you walked in. I said, "Is your first move? You're going to Miami. You're going to move the headquarters to Miami." But now I understand. Leave it in Omaha. Stay in Omaha. What are you going to spend your money on anyway? Might as well buy some Berkshire. You got nothing to do. You're going to go out and watch some cows or something. That's free, isn't it?
There's nothing better than Berkshire, and it's what I do every day.
That's right.
I wake up, thinking about Berkshire. I go to sleep thinking about
Greg,
Berkshire.
if you decide to splurge on your compensation, it's like you're looking around. It's like, I'm going to buy Berkshire stock.
What I think is interesting about this, Greg, is that you are effectively taking home less pay than Warren Buffett was when he was taking home $100,000. That was the salary that he took. It had to be the lowest pay in all of corporate America. Did he come up with this plan?
No, this was completely myself. And by that, I just mean I wanted that alignment. Again, believe in Berkshire. And the thought being that it did evolve. Like I said, okay, I'm going to do it this year. And then shortly thereafter, I thought, well, no, I'm going to do this every year. And it's best just to tell the world. And over that period of time, it'll be hundreds of millions of dollars of my after-tax dollars, just like our shareholders do.
I can't imagine any other corporate leader doing this.
But
I can't imagine myself.
I'm not worried about how you're going to do on this either. So.
Well, I believe in Berkshire, but it is interesting, Becky and Joe, you're touching on it. Like, to me, of course, it's a logical thing to do when you're leading the company. And there's other leaders and CEOs that do the one-offs every once in a while. But to take all your after-tax dollars and to do it on a recurring basis. I did
something similar with Versant stock. I'm with you. I'm an owner, and I.
You did not take your entire.
I got a couple hundred shares.
No, I did not take your entire.
No, I did.
Greg, what did Warren say about this? What did the board say about it?
Both were obviously very supportive. Warren very much had your reaction that no one else in corporate America does this, and said, and the other thing is that this is so Berkshire, because one thing we do not do at Berkshire across any of our businesses or with our executives, we don't have equity stock programs.
Right.
We don't have option programs.
You've never been given a share of Berkshire ever.
Correct.
Yeah.
So the whole idea is our shareholders, our owners, use their after-tax dollars to buy Berkshire. I'll do the same. So Warren acknowledged immediately the alignment with our values. And I highlighted this to our Berkshire board in our February board meeting, and they were just absolutely supportive of it, obviously.
Greg, Andrew's got a question as well.
Yes, Andrew.
Hey, Greg, it's great to see you. I applaud it too, but I just to contextualize it, because we talked about selling shares. Am I wrong back in 2022 that you sold Berkshire Hathaway Energy and collected effectively $870 million? By the way, which I also applaud, but I just contextually, what's going on here in terms of your total compensation and what's going into this?
Correct. So Andrew, back in the summer of 2022, there was the decision to sell my Berkshire Hathaway energy stock that had really accumulated going back to 1992, I think, is the duration of those holdings. And obviously we had built the energy company, were acquired by Berkshire in 2000, and then in 2022 monetized it. And again, with a very similar concept, I took a portion of those proceeds on an after-tax dollar basis and purchased Berkshire stock.
Yeah.
I'll just say I bought a heck of a lot more than 21 shares.
21 shares that cost $730,000.
Oh, that's right. Oh, that's right. You're right. This was 32. Okay.
Greg, let's talk through some other issues. That $373 billion that you had on cash as of the last filing. Do you see other opportunities? Are you looking for a big elephant hunting, as Warren always said he was doing?
Right. So I touched on it a little bit earlier, but the 373 million and billion.
Yep,
Sorry,
right.
thank you. Unfortunately, it's a billion. We really view that as an opportunity, and so we do continue to look across the different investment options that exist out there, and there really are options. We're looking at these different buckets and looking for the right opportunity. But there is no need to, obviously we want to deploy the capital into areas that we see long-term value creation for our shareholders. But the goal isn't to just take down the
I guess my question is,
amount.
do you see value out there in the market right now? Are things expensive as you weigh them, or do you see pockets of opportunity?
As we see opportunity, you'll see the capital deployed. And we're deploying it in certain areas across our businesses, across certain repurchases of our shares, across other equity opportunities. But the repurchase of our own shares is a great example. Is that Warren and I were just discussing this yesterday. We wish we could purchase more shares of our shares, but the intrinsic value has to be there. So if you go back over all the years that we've been purchasing shares, if we could acquire more, that's a great use of our capital, but it has to meet that intrinsic value.
But that's what I'm
test.
kind of getting at. You are now the person who's going to be responsible for deploying all of this capital.
Right.
I guess Ted Weschler's there. He has 6%. He's managing his money and the money that Todd Combs was managing before, too. But what is your view of the market at this point? It's something we asked of Warren all the time. Do you think things are expensive? If you think Berkshire shares, you're going to buy back some, but you're not going to deploy everything. You'd love to buy back more, but it's not cheap enough. What do you think when you look at the overall market?
Yeah, I mean, obviously we've commented on our shares. Mm-hmm. We file our, where we highlight what we've acquired and what we've disposed of, regularly. And we have some activity there, but it's not significant.
Yeah, I guess are you reading through 10Ks and 10Qs constantly and thinking, I'm looking for ways to deploy this, or are you looking at things a little differently than maybe Warren did because you're such an operator?
Thank you.
Yeah.
I'm an operator, but I love businesses and I love reading. Yeah. So I do the same thing. I'm going through Ks, Qs, I'm looking at what are they saying about their businesses. I'm looking at the industries that we traditionally look at and incrementally to make sure, one, have a thorough understanding of the industries, what businesses stand out there. It doesn't mean it's that there's an immediate value proposition there to acquire it, but that doesn't mean, or a portion of the business, but it doesn't mean it won't be there a month from now or 3 months. So I view of it a lot of preparation, waiting for when we see that opportunity, that the value exists within a specific opportunity.
You said you talked to Warren yesterday. How often do you talk to Warren Buffett?
Yeah, Warren and I pretty much, he's in the office every day. So we're talking if I'm in Omaha, we're always connecting. If I'm traveling like I was yesterday, I often check in just to catch up on what he's seeing, what he's hearing, what am I feeling. So if it's not every day, it's every couple of days.
Hey, Greg, would you do these large positions in like S&P bets that Warren has done? at times in the past. He sold a lot of puts, brought in billions of dollars in premium back in the early 2000s. You've made some Warren used to make macro calls, or at least hedging calls on the overall indices, not just individual stocks. Would that continue with you?
I mean, if we see the right opportunity, yes, but it's not a strategy.
He hasn't done it as much lately, I
Right.
don't think, has he? But I don't think he ever lost any money on any of those things. Did he?
No,
Did he ever have to
well,
cover?
not that I'm aware of, but I mean, as we all know, these financial markets have become more fine-tuned, and those opportunities, excuse me, may or may not exist going forward. I.e., where there's that, you can see an opportunity, and we would pursue or deploy capital. But if we saw an opportunity that made sense to us,
Yeah.
absolutely.
How about, you remember back in the financial crisis when major companies would say, Warren, can you? And he'd say, yeah, I'd be glad to step in. Here's what you'll do. 12% preferred stock convertible into 8, 10 Goldman's blue chip companies that I mean, it was like a no-brainer. If I could have done it, I would have mortgaged the house and gotten those terms. If I could have, would you do that again?
Absolutely. We look.
Yeah, let me think about it. You can have some time if you want.
No, we don't need to pause on those. And we still. It's not a distress time, but we still receive those calls even today. Warren receives them, myself. Maybe not in a distress situation, and we look at them, we evaluate them, but we're always prepared to act. And we'll act decisively and quickly.
Can you act the same way Warren did, which would be to do a deal for tens of billions of dollars and basically get it done in 3 days without necessarily telling the board until after the deal had been cut?
Well, within that period of time, we have a very good process in place between Warren and I and our board as to how we'll act as we have in the past, and we'll act very decisively and quickly.
So you can do a big deal without
in 3 days,
board approval?
Yes. Well, I would always, we have certain parameters where I would make sure, for example, our lead director is aware of what we're doing.
Okay.
But it does allow me to act quickly.
Okay. What about the idea of a dividend? That was something that Warren Buffett's never been a fan of. Would you potentially give a dividend back to shareholders if you don't see other opportunities in the market?
Yeah, and that's really, as you know, we have our dividend policy in place, and the thought, and it's reviewed and approved by our board again on an annual basis, and one that Warren has put forward every year, and we've maintained that we will retain $1 if we see the opportunity to create more than $1 for our shareholders, and that's been the test, and and as long as we meet that test, we would continue to hold the $1 because we believe we can create value for our shareholders long term. Now, incremental to that, we do see the repurchases as an opportunity effectively to deploy, to return capital to our shareholders.
Instead of dividends, you're basically saying?
Well, it's part of it. So if we didn't meet that test, we'd do a dividend. But we do constantly look at the repurchase.
I don't think that's more than I think I've heard from Warren and Charlie in the past. Just the idea, if you didn't meet that test, you'd do a dividend. Is that something you see in the near future?
We don't see it in the near future because we're clearly meeting the test as we see it. Okay. But we've always stated if we don't meet that test, that's the time.
So basically what you're saying is no change?
Correct.
Okay.
Could you ever see a time?
Would you rather?
Warren, a lot of technology, he may not have been the first person there, but he finally did enter, and he entered big, Apple, other companies. Is there any chance that some type of blockchain, new technology, crypto-related, maybe not Bitcoin itself, maybe not Ether or anything like that, but a company that builds out a blockchain that suddenly all the tokens are moving on this? It looks like the future. Would that ever be a possibility, or crypto would never be a word you'd see on a Berkshire?
I don't think you'll see crypto.
Ever.
Ever is a long time, you never say never, but I just don't see it. What I do see is that when it comes to technology, again, even from an operational perspective, where we're seeing how we use it, the impact it's having, it does allow us to develop strong views and a better knowledge base around certain companies that are technology companies or how we're using the technology. So technology will always be on the table and looking at.
So it could include some type of blockchain. No?
I don't know, because I haven't seen anything that would make sense that there's a value proposition where you see the asset and how it produces value.
Some people think it's going to disintermediate the entire banking industry. You don't want to just watch while
we'll be happy with our hard assets and the companies we own at that time.
But not gold. What about gold miners? How about airlines? Where are you on that now? Remember how many times Warren's been in and out of, oh my God, I'm in them, I'm out of them, then I'm back in.
I know this is one of your favorite topics. We're very happy that we own NetJets and the service it provides to its great customers.
Greg, let me ask you a couple of quick news questions. First of all, back in January, Berkshire filed an SEC registration for the potential resale of up to 99.99% of the Kraft Heinz holdings that you own. More recently, you did say that you supported Kraft Heinz CEO, the decision to pause on that planned split of the company. Have you made a decision about what to do with that investment?
Well, we did announce, as I said, support for Steve pausing it.
Yeah.
And just for a little bit of background, as you know, when they first said they were going to split, we didn't. We expressed concerns with it.
You were vocal about it,
right? Because they did when they brought Kraft and Heinz together. The whole idea was that there'd be a lot of synergies, a lot of opportunities, and then they announced. And it's, as I highlighted in the letter, it's been a disappointing investment. There's no question. At the same time, to break them apart when they're facing a lot of challenges and haven't resolved a lot of their issues yet. We had concerns with that, including now adding dyssynergies to it. So for Steve to come in and say, we're pausing it, there's opportunities within Kraft Heinz to fix things and get the business back on track, and then he'll evaluate things. We thought that was absolutely the right approach, and we filed our registration statement really to be in a place that if we ever did sell, we'd be able to, but it's not that we're going to take any immediate action currently.
Okay. Good. Another issue this week, S&P said that it may cut Pacific Core Utility, which is a Berkshire-owned utility, to junk because of the wildfires and the lawsuits that have been resolved about it. This is another issue you touched on in your letter to shareholders. I think in the letter to shareholders, you basically said you accept responsibility for wildfires, but you're going to fight unjustified claims in court, and you think that this is one of those situations.
Correct. So. Anytime we're responsible for something, we're willing to take absolute responsibility for it and resolve such matters. But there is a delicate balance, and it goes well beyond wildfires in the utility industry. The wildfires are very specific to the West, and we've seen some challenges in Texas and the Midwest that, it's not an issue just to the West, but you can see it creeping. But what we see is a bigger issue in the utility industry, and that is, does the regulatory compacts continue to exist? And by the regulatory compact, I mean we deploy capital into these businesses. We receive a return that's reflective of us taking a certain amount of risk. Mm-hmm. And the minute they start expanding that risk to be pretty much anything, including things you're not responsible for, we're saying that wasn't the investment thesis. That's not the relationship that existed.
Just to put some context to this, this came after a February 25th ruling where an Oregon jury awarded $305 million to 16 plaintiffs. That's about $19 million per plaintiff. Those plaintiffs blamed Pacificor for not turning off the electricity.
Right. And there were lessons learned, because if you look, and that's what we're saying, when the ones where we clearly caused the fire for not turning off the electricity, mm-hmm. we're taking responsibility for those. But separately, there were a number of fires there, and this gets beyond, but there is one area and one fire we're pushing back, and it represents more than 60% of the claims. It was a lightning strike. And we're just saying we're not responsible for that. We're sorry, absolutely, that these people's lives have been impacted. We feel for them. but that's not the utility's responsibility to take on those costs and obligations. So that's where we're drawing the
And
line.
you guys know the insurance business pretty well, I think, don't you? You know when you're covered, or things you need to cover, and things that you can't run a business.
Right, and it goes back to that regulatory compact. That's not part of, we didn't sign up for that.
This was your first letter that you wrote. It was a long one, 18 pages or so. It was first
Is that AI?
No, but I will say on the length, that's the first response I get from everybody when they text me as they're reading it.
Yeah.
Geez, this is really long. I'm halfway through. And I use this quote back to him, and it won't be a perfect quote, but President Lincoln said, yes, this letter is very long, but I didn't have time to make it shorter.
Was it hard?
And I use that to everyone, because
That's right,
everybody
yeah.
would be texting me,
Yeah.
well, I'm halfway through, but so far it's going well. And I text them that quote every time.
I mean, you're stepping into some pretty big shoes. Warren's been writing that letter for 60 years, and it's something that had a huge following. Was it a tough letter to write?
Absolutely. So the shoes to fill are tough on all fronts. But Warren's an exceptional communicator and how he does it. So to take the letter and really want to make sure we're communicating to our owners and shareholders that's something that they would value, it was not easy. Yeah. I've told Warren of all the responsibilities transferred are great. But as far as the work and the task I had to do, that was the toughest. To sit down and make sure that was done, at least from my perspective, well. And unfortunately, when we were discussing it, he said, and the second letter doesn't get any easier.
So you have that to look forward to.
Yeah, exactly. That's what I wanted to hear.
It's every year,
and
it'll come fast too. It's like you just finish it. It's like taxes.
But you know what? When you when you do write it, it's like everything, or when you prepare for something, it's valuable.
Yeah.
I had to reflect on a lot of things.
Right.
And then
when you're done, it's just leading into it.
It's leading into it, right? Exactly.
Greg, very quickly, operating income was down in the fourth quarter, more than 29%. That was largely because of weakness in the insurance business, and as underwriting profits were down, I think close to 50%. What happened?
Yeah. So in the fourth quarter, which then translated for the 12-month results, is that, our insurance results were down. You can see a lot of capital coming into the industry. We, or our team, Ajit and his team, will continue to apply the discipline that the price and the risk have to be right for us to write a policy. So as we back out of that with capital coming in, you'll see those results be what they are relative to how much capital we deploy into it. So that had a significant impact. And then the other piece of that is we did, across our non-insurance businesses, take a $1.555 billion impairment. And that was across 4 of our businesses, and realistically, smaller businesses and challenged industries. If it had been any of our major businesses, I would have touched on it. But it really related to 4 of our smaller businesses, again, in industries that we see as challenged.
Okay. Greg Abel, the new CEO at Berkshire Hathaway, sitting down with us for the first time today. We really appreciate it, Greg. And we look forward to seeing you at the annual meeting.
Absolutely.
So it's not Creighton anymore, is it? Do you have a team that you like in March Madness is coming?
I'll be cheering for, let's just say, Joe, as you touched on earlier, all the Midwest teams.
All the Midwest teams.
All of them.
All of them.
All of them.
We've got, my wife's from Iowa State. I have allegiances with Nebraska because I mentioned earlier my one grandfather was born in Unadilla, Nebraska. I've always followed the Cornhusker, you name it. I've got a spectrum of teams, and my family reminds me of that. Pick a team.
Iowa State was looking good, and then I bet on them, and they were number 4, I think. They lost the last 2 games. I think.
They've had a rough couple games. Hopefully they find it. But it's been a pleasure to be on. Thank you, Becky. Thank you, Joe. And great being here.
Don't be a stranger. Yeah,
absolutely
it's great to have you back. Thank you.
We'll be right back. And that's it for Squawk Pod today. Thanks for listening. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern. To get the smartest takes and analysis from our TV show right into your ears, follow Squawk Pod wherever you get your podcasts. Have a great day. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.